Fisher from UBS. Your line is open.
Great, thanks. Good morning, and congrats on hitting your commercialization goals. Just on the hybrids, you have a $1.5 million backlog. What kind of visibility do you have for Q3 and Q4? I know you reiterated the guidance there. Is there any further kind of risk that those slip a little bit more, and what might it take to improve that certainty?
Thanks, Steve. And yeah, so first off, we were excited to share the $1.5 million in backlog. While we did see sequentially a dip in our revenue recognition for this past quarter, I think that backlog shows that there's a strong customer interest still in the product. And a lot of the slip really just came from supply chain issues and specifically around availability of trucks. And so we did have installs that were scheduled for Q2 that have since slipped into Q3 just because of truck availability. So we've got a high confidence that we'll be able to do those installs in Q3 and Q4, and that's why we feel confident with reiterating the $2 to $3 million in overall yearly guidance.
That's helpful. I mean, just to clarify, I mean, has the supply chain stabilized enough that you're now, as of now, receiving all the components and everything you need to achieve that run rate?
Yeah, so we're feeling good on our side in terms of the supply chain, and a lot of that just came from having placed orders a while back and working closely with the supply base to actually get those components in, and that's where our Hypertruck development still stays on track with where we wanted it to be. With the hybrid specifically, it really just came down to we were awaiting trucks to come in from fleets, and so there's kind of two different aspects of this. One is some of the fleets we were working with were actually waiting for the trucks from the OEM. So they had placed brand new trucks, and they're waiting for those to get delivered to then come to us install them, to then ship them back. The other aspect is we actually had some fleets that had placed hybrid orders and were planning on doing upfits of existing trucks in their fleet, but they're just so busy on the logistics side that they couldn't down the trucks for a couple of weeks while we do the install. So that was what also played into the reduction in revenue for this quarter. But we're working closely with those fleets, and we feel confident that in the 2 quarters ahead here we'll be in good shape to be able to hit that total year target.
Okay, great. And then shifting gears over to the ERX, just curious if there's a particular catalyst point for bringing in a bigger wave of orders or converting some of the reservations you have into orders. Is it certifications that you need? Is it really just getting the production started late next year and kind of being proven out? I'm curious in the near term, over the next few quarters. Obviously, you had 10 additional orders in the quarter. What's kind of the reasonable level to expect as we proceed here for the rest of the year and into next year ahead of that commercialization?
I'll start off with saying, the goal going forward here is to continue to increase the demand of the Hypertruck and continue to grow that backlog of both orders and reservations. And to your question, I think there's a couple of different catalyst points. The first that we've already experienced is starting the actual ride and drives, and that's when we really started the orders, which, just to reiterate, an order it's a commitment to a production slot. It's backed by a deposit, and so we've booked out the first 200 of those. The catalyst there was really starting the ride and drive events with fleets, letting them get in the truck and actually experience it firsthand, and that's what ultimately stemmed the round of orders. We see another catalyst point when we actually go into fleet trials, which, just as a reminder, later this year, second half of this year, we'll be launching controlled fleet trials, and we'll carry those through into next year, expanding how many fleet trials we're doing as we move into production. I think that's going to be another catalyst for us as fleets get to really run these trucks in their operations. As we noted on this call, we actually did our first freight delivery with Green Path Logistics this past quarter. And then the other catalyst that we obviously see as probably the largest one is actually moving this into production, which, as a reminder, will start in late 23. So I think as we go through this journey, we'll continue to look to grow that backlog. And for different fleets, just depending on what their buying cycles are, some are confident and ready to go just after a ride and drive, and others are wanting to do in-trial experiences, and others want to see it in production first.
Okay, thanks, Thomas.
Your next question comes from the line of Bill Peterson from J.P. Morgan. Your line is open.
Yeah. Hi, guys. Thanks for taking my questions. It's nice to see that the Hypertruck should qualify for the for the incentives under the Inflation Reduction Act. I guess as we look at the 2024 and beyond models, you should, I guess, assuming you get up to the 40K benefit. But that said, is that a lot of other truck companies will also benefit from that too. So wondering, as we think about our models, how should we think about pricing at this stage? I mean, obviously there's been a lot of inflation until now, so any sort of older models, I'm not sure we should rely on. But how should we think about pricing, and then obviously as it relates to the cost of ownership for your customers?
Yeah. Thanks, Bill. And I guess at first, we have not come out with formal MSRP guidance on the Hypertruck system. Reason being is just over the last year specifically, we've seen a lot of fluctuation in the market, both from the supply market standpoint. We've seen drastic increases in just even diesel truck pricing, pretty substantial increases actually. So from that standpoint, we're looking at it closely. We're working with the customers that that we've announced orders with and reservations on to make sure that we're able to supply them a solution that works well for their operations, works well from a TCO standpoint, but ultimately is obviously bringing forward the best return for our shareholders as well. So with that being said, the thing that we see is really positive with the Inflation Reduction Act is ultimately it's going to decrease the upfront cost of the vehicle, which is great. And one of the things that we've reiterated in the past is our operating costs are actual, running this truck in a fleet, the cost of that operation is less with our vehicle than it is with a conventional BEV or it is with a conventional hydrogen fuel cell truck. So if we can reduce that upfront cost and couple it with a lower operating cost, that's a win-win for a fleet.
Okay, thanks for that color. Wanted to ask about the relationship with Cummins. On one hand, a few quarters ago, you announced that the Cummins 15-liter would actually be a competitor, with your hybrid. On the other hand, you've now announced Cummins as your generator partner. I guess how should we view this? Is this a competitor or a collaborator, especially as it relates to hybrid? And I guess are there other areas for further collaboration as we think about future products, things like agnostic or fuel cell? Any update there would be helpful.
Sure. So I think you gave a good high-level overview on it. A couple of quarters ago, we did express that we saw Cummins' new 15-liter as a competitive threat to the hybrid system and really just reducing the total market opportunity that we would go after with hybrid. But obviously, we've announced they are a strong partner with us, collaborator with us on the Hypertruck solution. And we're really pleased to express that collaboration because I think it shows just the confidence they're bringing forward in the product line. It also increases our confidence levels as we go through the CARB certification. So I think a lot of benefits that come from that. Ultimately, as we go forward, we'll continue to work with Cummins and look at what are other opportunities or ways we can collaborate. Phil, as we've chatted about it, and as I know we've laid out a three-step approach to ultimately get the company to a hydrogen-based future. The fuel agnostic solution as well as a fuel cell solution, which we plan on being able to share more as we go forward. And we're looking at various partners or ways that we can bring those solutions to the market.
Thanks.
Your next question comes from the line of Andres Sheppard from Cantor Fitzgerald. Your line is open.
Hey, Thomas. Hey, Sherry. Congrats on the quarter, and thanks for taking my question. I wanted to maybe ask about the order book and the reservations, right? So you've updated the backlog, grew by 30 if you include the recent announcement with Ruan, and so bringing the total to 200 orders and the 2,000 reservations. I'm just wondering, could we get your thoughts? Is the expectation to convert all 200 orders and 2,000 reservations, or should we maybe conservatively assume that maybe some of those don't materialize? I'm just wondering if you can maybe help us try to quantify those going forward.
Sure. So on the order side, these are really commitments for production slots, build slots of these trucks. So from our end, as we've shared already, we're working towards a late 23 launch of these, and as we discussed, as we go into 24, we'll have those vehicles delivered back to the fleets in the early part of 24. So late 23 start of deliveries rolling into the early 24 timeframe. For the reservations, those are really indications from fleets of their interest levels of how many units they want to be adopting into their operations. Some of those milestones I mentioned before when talking about with Steve about what are some of the key catalysts that we should be looking at. Those are the things fleets are going to be wanting to see. So we do expect to be able to take some of those reservations and convert them into orders as we hit those different milestones. And we already accomplished one of those. We had an announcement around Monet, who had placed a reservation with us, and then we were successfully able to shift some of those reservations over to orders just after even a ride and drive experience.
Got it. Okay. That's very helpful. Thanks for that color, Thomas. And maybe to follow up on Bill's questions regarding the Inflation Reduction Act, right? I think it's great that the ERX will qualify for that 30% tax credit. Do you have a sense of when you might be able to provide the ASPs for the ERX? I'm wondering if with this tax credit, do they become more competitive, but are they still competitive with traditional diesel counterparts? I'm just wondering if any plans on providing those ASPs or any additional comments that you could share there. Thank you.
Sure. So we do envision being able to supply more as we go forward on that end, but ultimately just the changes that have happened in supply chain as of recent, and even the changes in cost of fuel as of recent. We've seen natural gas stay pretty stable in terms of actual pump pricing. We've seen diesel skyrocket, right? I think if we look at the last year, we've probably seen a doubling, maybe even close to a tripling of diesel pricing. And so we're really looking at this and looking at it from a standpoint of we understand our fleets we're working with want to see a strong TCO model around the product. They want to make sure that it works from a cost standpoint in their operations, and we're targeting being able to provide that to them. But we also want to make sure that we're setting the pricing accordingly for our business model, just as we look at what are the COGS and what are the benefits we're able to supply to the fleets, and making sure there's a strong return for Hyliion on that end as well.
Got it. Okay, thanks, Thomas. And maybe, sorry, one last one, if I may. In regards to the continued supply chain disruptions, right? Those are affecting not just Hyliion, but those are industry-wide and at a global scale. I'm just wondering, do you expect those to continue? And if so, what kind of impact might that have on the orders and the reservations, as we look to 2023? Thank you.
So we're hopeful that it's going to ease up. I don't think we've seen it yet, though, on the supply chain side of things. It's still I think everyone's being affected by it, not just Hyliion by any means. I think to our advantage, what's working out well is a few quarters ago, we really buckled down and looking at what do we need over the years ahead from a supply basis, specifically as we go through the Hypertruck ERX development cycle. And we've been working with those suppliers for a while now to make sure that we're able to obtain and secure those components. And that's why you've seen us for 3 quarters now consecutively, we've been able to hit what we told you we were going to do on the Hypertruck development. And we have strong confidence in the continued plan forward on that development cycle. So huge props to our supply chain team on just working closely with the supply base.
Wonderful. Thanks so much, Thomas. Congrats on the quarter. I'll pass it on. Thank you.
Your next question comes from the line of Jason Strudler from Barclays. Your line is open.
Hey, team. Apologize if there's background noise here. I wanted to follow up on the hybrid comments this quarter. I think I heard it, but I just wanted to confirm the holdups are really just on truck availability, nothing on your material or install process. And then as I look at the revenue you've done to date at about, $500,000, and your backlog of about $1.5 million. It seems like the low end of that guidance range is kind of best case scenario. I mean, am I thinking about that right?
Yeah, so I'll take the first part and then Sherry can share. So the first part is really, yes, it was driven by truck availability. We obviously had our own supply hurdles on just components, but we've been working through those. But the biggest driver was truck availability in getting those in from fleets. That's what also has stemmed us saying, well, maybe we'll supply the entire vehicle as well to a fleet just to help break down that barrier. But Sherry, do you want to take the second part?
Sure. And so I think that you're going to see a combination of two things. One, you'll see not only the backlog of our system installations, but also a portion of that will include full truck sales with our system installed. So the exact mix of that revenue is going to be really dependent on the truck availability, not only at the OEM, but the customer availability that Thomas has said. But given the line of sight that we have today, we still have confidence that we're going to be able to achieve that guidance range.
Understood. And as we think about hybrid, over the next 4 to 6 quarters, have we seen anybody cancel hybrid orders because of truck availability? And Thomas, to your point, maybe they don't want to, idle their trucks for you to do the install. I mean, any sort of headwind there?
Yeah, I think it's more just been a pushing to the right. We have fleets that still remain very interested in it, and they're working closely with, the OEMs that they're getting trucks from, and then we're working closely with the fleet and in some instances directly with the OEM. So I'd say it's more just shifts to the right, and that's why we felt confident in this call coming out and just sharing some more of the backlog we've been able to establish on the hybrid product, because I think that showcases there's fleets there that are interested in taking delivery. We just need to work on actually getting them installed and back in the fleet's hands.
Yep. Okay, understood. And I guess, Sherry, just financial questions, or maybe for Thomas as well. But as we think of, good to see OpEx in control. As we think about, where you guys will exit the year from a headcount perspective, what sort of expectations should investors have about headcount growth next year, kind of versus the exit rate this year?
No, that's a great question. So we will continue to invest in headcount for the balance of the year. And the majority of the headcount that we're going to be adding is really in the engineering group so that we can really complete our product development roadmap and timelines that we've talked about. But our expectation would be that as we're starting to exit the year, that we will start to flatten out that headcount, because we believe that we will have the appropriate level, not only from a back office perspective, but also from a product development perspective. So I would anticipate that we'll start flattening out as we start to exit the year.
Understood. Very helpful. One more, if I could just sneak it in. On Hypertruck, a few questions, Thomas, maybe. What keeps you up at night, in terms of the milestones from here to SOP in 23? It sounds like there's not going to be really any need for design changes or anything like that. So what are sort of the biggest, risk factors in your mind? And then when I think about the 200 unit reservation slots, is the expectation to kind of convert those into sales, call it 12 months after SOP? And you talk about truck availability on the hybrid side. How is truck availability on the Hypertruck side for those initial 200 units?
Yeah, thanks, Jason. So a couple of different parts there. So in terms of what keeps me up at night, I wouldn't say there's anything that's like jumping out as, this has been a problem that we've been running into. I mean, I think we're just going through normal development cycles of a new technology. Been very impressed with what the team has been able to do on that end. I actually went and got my CDL and did a couple 100-mile trip in the truck, and it was honestly a fantastic drive and an unbelievable experience. So really pleased with how the development is going. Obviously, we do need to go through CARB, EPA, and NHTSA certifications, and those things move out of our control a little bit. We have confidence that we're going to be passing them with no issues, but that's obviously just a barrier that we need to go through, or a checkpoint we need to go through. In terms of the 200 orders and just how we're looking at deploying those, so we'll start later in 23 with the actual deployments, And then our plan is to have those delivered back into fleets' hands by the end of Q1 of 24. So, I think you had mentioned maybe a 12-month period. We're more thinking a shorter period that by Q1 of 24, all those vehicles will be in operation and deployed with fleets.
And so all the trucks are available then? Like, you feel confident in just the capacity, be able to meet that from a capacity standpoint?
We do. So just to reiterate one other thing we shared. So we're going to be going to market with the Peterbilt chassis, and we've been working very closely with Peterbilt and have confidence in the delivery schedule of those 200 trucks. We've been working with them on kind of when we need to be having the orders placed in order to get the build slot secured, and we believe we have the right amount of time in between now and when we need the trucks, that there won't be any issues. But the relationship with Peterbilt has been going very well, and they've been a great group to collaborate with as we're bringing this technology to market.
Okay, very good. Thanks, guys.
And again, if you would like to ask a question, press star, then the number 1 on your telephone keypad. Your next question comes from the line of Mark Delaney from Goldman Sachs. Your line is open.
Yes, good morning. Thank you very much for taking the question. Thomas, you spoke about potentially offering the hybrid by selling the full truck. So I believe that would be a change in approach. So would you elaborate on why you may make that change and talk about some of the mechanics of how you could potentially implement that?
Yeah, absolutely. So to add a little more color, so what we shared in the past is the hybrid is a upfit add-on to an existing truck or a brand new vehicle. One of the things we're pursuing is actually bundling the entire vehicle. So the truck from the OEM plus our hybrid system, and then us supplying that full package to the fleet. A couple of reasons and benefits that actually come from doing this. One is that as we source brand new trucks from the OEMs, if we actually spec the truck appropriately as it comes off the production line, it can actually reduce our install costs and thus improve the margins on the vehicle. So obviously that's a big positive. The other is just as we've been going through these supply chain issues with fleets and having issues arise where they're not able to down trucks for a period of time in order for us to do the install, we're looking at it as if we can supply them the entire asset, that allows them to move quicker and ultimately us to be able to deploy hybrid systems more efficiently and effectively into fleet's operations. So that's what really stemmed it.
Makes sense. Could you speak to potential timing of when that may be available and how many trucking providers you could potentially partner with?
Well, thanks for that question. And one, we are on our hybrid system, we are OEM agnostic. So that is a system that we are able to install on any of the OEMs. So that is one component. This year, we expect to do probably low single digits from a full truck perspective. But again, I'm going to go back to their earlier comment that the mix of our revenue is still really dependent on the availability of the trucks at the OEMs.
Understood. Thank you.
And your final question comes from the line of Noel Parks from Tuohy Brothers Investment Research. Your line is open.
Hi, good morning.
Good morning.
I was interested in the Innovation Council and some of the announcements you've made about orders have been from members of the council. I'm just wondering, how far you are along with commitments from the council, and for those who haven't yet made commitments, if there are any, are they envisioning still any design or functional refinements before they're for their specific businesses before they're ready to commit?
Sure. So just as a little background for those listening in, the Hypertruck Innovation Council was a group of fleets that we announced probably approaching a year ago or so now. And our goal with them was really have them be a part of the development cycle along with us, have them experience the vehicles before others to really give us feedback on what they like or what areas do we have to improve. And we've done exactly that. The Innovation Council members have come down to Austin. They've gone for ride and drives in the trucks. They've given us that feedback, and that's been invaluable as we've gone through this development cycle. as you've noted, some of them have made the jump to actually placing orders for production slots, specifically some of the recent ones around Ruan, NFI, GreenPath Logistics. Those are all members in the council. Some of the other council members, show a lot of excitement in the technology, but they want to get through some of those later milestones that we had mentioned before. They want to go through fleet trials. They want to get initial trucks into their operations and run them firsthand. And so we plan on executing upon that. Control fleet trials will start later this year, as mentioned before, and carry into next year. So we look to continue to expand the relationship with the Innovation Council members, as well as we've been really pleased to see a strong interest coming in from fleets outside of that council as well.
Great. And just a question. I know it's super early to even have a feel for this, but with the Inflation Act, the tax credit that's in there, are there any concerns about maybe that incentive coming on board and it actually delaying people making orders just as they're awaiting sort of more details on the rulemaking process and so forth? Or do you think that just is going to be sort of incorporated in overall pricing negotiations going forward anyway?
So I think from a timing standpoint, from what we're seeing, it's going to line up well because as a reminder, the Hypertruck goes into production in late 23. So that's when fleets will actually be purchasing the vehicles. So I think it's going to, timing-wise, be fine. What we see is more of an accelerant as opposed to potentially a slowdown. And the reason being is just if we reduce that upfront purchase cost to the fleet, that allows them to jump in more easily or quickly into the product. And, we see one of the, as mentioned before, one of the really benefits with our product is our low operating costs. So reducing the upfront costs helps a bunch, providing them the low operating costs because of the low-cost natural gas. That's a big win for the fleets.
Okay, great. Thanks a lot.
Thank you.
And this concludes the question and answer portion of today's call. At this time, I would like to turn the conference over to Hyliion CEO Thomas Healy for closing remarks.
Thank you, everyone, for joining today's call. As you heard throughout the call, there's a lot of exciting developments and milestones that are being achieved within Hyliion, and we foresee a lot more excitement in the near future here. And so with that, we will be hosting a call on September 13th. It's going to be called a virtual ride and drive event. We encourage everyone to please dial in and join us for that. We're not only going to be showcasing the operations here in Austin, showcasing the truck and what it's like from an experience standpoint, as well as just sharing more on the business strategy on a go-forward basis. So please join in September 13th. In the weeks ahead here, we'll be sharing a link so you can dial in. With that, have a great rest of your week.